Steve, some of the biggest companies, some of the most notable companies in the country reported earnings this week, and most of them weren't that good. Apple, Facebook. What's up? Is there a trend there?
Well, it's been a tough earnings quarter, no question about it. I think in the past we've talked about the reason behind it being that revenues just aren't keeping up, and these companies are able to, maybe not manufacture, but work earnings a little bit and cut expenses, and that's how they're mostly beating estimates, because most S&P 500 companies are beating estimates. Apple did not. We obviously saw that on Tuesday. A lot of concern there, but I'm less concerned about Apple because they have a new iPhone that everyone expects to come out in the fall, and in the past they have had this slowdown before a new launch of a big product like that. So let's wait until a couple of quarters and see how the new iPhone performs.
They're not just hitched to the economy. They've got an active product life cycle, kind of dormant right now, but in, December we're going to see an iPhone 5?
I'm not sure the exact timing, certainly after the next earnings report, which will be the September quarter, so we won't get it until then. But the question then becomes, is this now the new Wintel? Is this Microsoft and Intel where they wait for the product upgrade cycle and it's not this skyrocketing earnings path? The other one you mentioned was Facebook. The situation with Facebook, they reported Thursday. They reported a headline loss, but that was largely due to accounting for stock compensation, restricted stock units.
But the revenue is what you were looking at.
The revenue you were looking at, the revenue grew. That's a good sign, revenue growing, but they didn't offer a whole lot on how they're going to monetize mobile. They freely admitted that they're in sort of a new world in terms of making money and how they're going to do that with advertisers and that kind of thing.
Most of their new user growth, coming up from mobile sources. And they don't really have many ads that hit you on the mobile devices.
It remains to be seen what we're actually going to get out of them. And the stock has a tremendous valuation. It came out at a very high valuation. Even after plunging, it's down 40-something% from the IPO price.
What,
it's
50
down,
times now earnings?
It's down 15% today, and it's still in the 40s on a PE multiple, on a price to earnings.
Well, we'll see. Sales are growing about what, 15, 20%?
Sales are going very good. I think the number was 30%. So you have good earnings growth, but the concern is you also have these lockups expiring where employees and previous shareholders can start selling their stock. We saw it with Zynga, where a bunch of folks cashed out a few weeks ago, and then the earnings didn't come out so great.
Zuck and his buddies might be selling.
So we'll see.
There's been some pretty notable guffaws this week along with the earnings news. Sandy Weil told CNBC that, the big banks should be broken up. This is the guy who got Glass-Steagall repealed. Do you find any kind of farce in that statement? Do you think they can be broken up?
It is absolutely unthinkable that the man who was behind making these big banks, with him combining Travelers and Citibank, before Glass-Steagall was even repealed, he went ahead and did it even before the act was repealed. Congress was forced to do it as a result of his merger.
In your piece, you said that this is like Angelo Mozilo saying subprime mortgages are bad.
Right. I mean, it's completely unthinkable. Exactly, which would never happen. But we never thought Sandy would come out and say, break up the big banks.
What's his angle? Why would he be saying this kind of stuff?
Who knows? A politics angle. He's trying to get back into the scene.
Must
Perhaps.
be a buck to be made.
Yeah, exactly.
Can we break up? Should we break up the big banks? Would it be beneficial to the economy? Do you think? Anybody here?
There's lots of calls out there to break up the banks, but no one's really proposed a real idea and to disintegrate them. There's no real plan on the table to say, here's how you would do it. What happens with a bank like Sandy's, like Citi? What do you do? Do you spin out the commercial bank in the U.S.? Do they operate as a conglomerate everywhere else? What does that do to their clients who do business overseas?
And they are the conduit for the Fed's monetary policy. If the Fed didn't have these guys to do business with, who would they do business with?
No, exactly.
Maybe that wouldn't be such a problem in the future, but transitioning would be hard.
Right.
Agostino, in Europe and in the U.S., we've got central banks taking the fore next week with Bernanke and the FOMC meeting at the end of the month and the 1st of August, and the ECB, which has done a lot to help buttress markets this week.
We had Mario Draghi in the news this week, right? He came out and said, believe me, I'm going to do everything we can to keep the euro together. And then we had Merkel and Hollande come out and also say, we're going to do everything we can. So this week we saw the euro crisis kind of explode again. We saw borrowing costs in Spain go up to what they've been calling unsustainable levels. There's been a couple estimates to say 3 to 5 weeks until they run out of money and are kind of forced out of the
Greece, isn't Greece in that same position?
At the same time, Greece, we saw them that maybe August 20, there was a report saying August 20 they got a bond redemption and they're not going to have enough money to pay for that. So we kind of saw the threshold being pushed closer and closer for them to have to do something to act. Now Draghi has put himself in a kind of difficult position because markets rallied and bond yields fell after he spoke. So that means that next week, I believe on Thursday we have the ECB meeting. He's going to have to deliver something, because if he doesn't, the markets are going to kind of go crazy, and we might expect bond yields to spike.
Right. So looking at stock markets, you wouldn't expect two large economies, or at least one large economy, Spain, to be on the verge of having no cash, and Greece insolvent, basically. One company I was looking at this week for the dividend stock daily was Las Vegas Sands. We started doing this thing every day where we put out a dividend stock. And Las Vegas Sands, you think it's just a growth stock. And it is levered to the growth in China. Company came out, the stock got hammered. All the gambling stocks were China and Macau, where we have all the growth. Still managed 10% revenue growth for Las Vegas Sands, but the profit disappointed. Point of my story is it's kicking out a 2.8% dividend yield. And
it's double the treasury.
Double the treasury, right? And it's growing its revenue at 10%. And if you believe Asia is a market that's going downhill, I guess it's not a stock for you. But with more people getting rich in Asia, going to places like Sands, Macau, I think it's a decent stock though. Hot Topic was another one I looked at a high multiple, but they're yielding 3.23%. You guys see anything interesting out there that is attractive or unattractive?
Well, I think the whole market is going to be really attractive when Ben Bernanke decides to take
Not
more
to do
Fed
anything?
when he does something.
When he does something.
Now, I'm not expecting it next week. The Fed's going to meet Tuesday and Wednesday. There's been reports that they're coming around to more action. They're more likely to do something. The U.S. economy is slowing. You just mentioned the slower growth in emerging markets. Europe obviously could fall apart at any moment, although they're seeming to come around to a backstop. I don't expect it next week, and the reason I don't expect it next week is they have another jobs report number coming on Friday. Jobs growth has clearly slowed in the second quarter to 75,000 jobs a month on the non-farm payrolls
Down
number.
from 225 in the first quarter.
Exactly. So in the first quarter of the year. So now we'll get the first report of the third quarter, the July number. I think the Fed will wait to see that. I think the Jackson Hole conference that they put on in August is a time when Bernanke typically comes out and signals what they're going to do in the fall. If we're going to get another round of major asset purchases, I would expect, as things stand right now, I would expect it to come in September when they have a two-day meeting, when there's a Bernanke press conference, and not next week when you could still make the case either way. The Fed might be leaning towards more action, but I think they're going to,
He's really waiting until he can see the whites of the eye of the slowdown and then pull the trigger.
Well, that's my view of it. I haven't spoken to the chairman, but that's how I sort of see it.
And also, if and when Bernanke acts, we could expect gold to go up. It started rallying the last couple of days of the week. And as we all know, generally QE or asset purchases, it kind of floods the market with liquidity, and a lot of that finds itself to gold, which has been kind of a disappointing asset this year. And furthermore, if we see action from the ECB, that should also be bullish for gold.
Yeah, gold peaked August 22nd last year at $1,920 per ounce, and we're pushing, what, around $1,600 right now, and it really hasn't been dropping a lot lately. So what do they say, don't short a flat market? Gold's been pretty flat lately, and as you point out, there's some good fundamental impetuses for moving it higher.